2,274 options on Expedia EXPE, done at 9:56 a.m. Today is May 12th. It is now 11:18 a.m. So in this video, we're going to go over what these unusual options mean, and also point out that this 10:52, which was just done about 30 minutes ago, the 102 strike calls, is also very unusual. And then we're going to share how we are trading these unusual options. So without further ado, let's get right into it. For context, let's take a look at the charts. You'll see that after this drop in Expedia in March, it has been trading on a range around here at 97.5 as the resistance, and the current level of $89 as support. So we are at a support level. It has never crossed that $100. So that 102 strike is very interesting, very unusual why that was being bought. So as you can see here at the 102s, you'll see here these 102s have a much higher volume than the open interest. So these are opening orders. And so that's what's quite interesting about it. When we look at the June 23s for the 79 strike puts, you'll see here also volume is much greater than the zero open interest. So these are also opening orders. And what we think is going on here is that this large institution, if we look at the market pricing, you'll see here that they transacted at $99. The market was at 94 to 114. So this transaction price was a lot closer to the bid. And so that's one of the reasons why we think this is a sell, so that they sold this, and also it was close to the one standard deviation of 1615 delta. And so when they sold this, they basically are agreeing to buy 100 shares at $79 of Expedia. So that's why it's 79 strike puts. So when you sell a put, that's 100 shares. So 79 times 100 is 7,900 per contract. So they put in times 2274, they needed $17.9 million of capital or buying power to put on this trade, to sell these puts. So this is definitely a large institutional investor. And so they really believe that Expedia will not drop below $79. And if it does, they're very happy to own it at $79 a share. And so the way we are trading this, well, let's first put this up and analyze this so you can do a comparison. So this is what it looks like. At expiration, they will not be at a loss if it doesn't drop below this line at $78. And so everything above that zero line here is profit for them. So they're selling a put. And so how we are trading this based on this unusual options, we went out to much closer date, just a quick trade, and we sold this 80 strikes. It's the same idea of selling a put and not and being and believing that it won't go below 80. As long as it stays above 80, we will be able to keep our credit. So this is our half of our trade. So it is a one where we collect a very small amount of credit. You see here this 5. However, what we're doing is we're taking that credit and then we're going to go out and buy that 102 strike call. You'll see here our position as well. And the one we're talking about is, so this is what it looks like. And so when we analyze this trade, let's turn off all of them now. Just turn on this one. You could see now that the trade that we have now on is one in which if Expedia doesn't go up, if it doesn't go up or go down, it doesn't break. This is our break even. Let's kind of take a look at it a little bit closer so you can see all of the more details when we get to this. Okay, there we go. So now our break even is over here. You see here $79, what we were talking about with these unusual options, $79. Our break even is there. As long as it doesn't drop below that, by May 19, there will be no loss. And so the reason why we did this trade is because we don't want any kind of losses while we are into these 102 strike calls, because these are very unusual to be buying this. So we're thinking maybe there's something going on, maybe something will happen, and if something does happen, there would be a high payoff for it. As you can see, the purple line the profit starts to increase as it goes up and higher in price, because this is our profit. Anything above is profit, anything below is loss. And so we are minimizing our losses. If the $89 where Expedia is right now, if it goes down on the x-axis here in price, we will not be at a loss, because by expiration, this line, this purple line, will become that blue line, and so then our break even is at that $69, $80 range, where those put options were sold by that large institutional investor, because it's giving us a more strong belief that it won't drop below that. And then we can use that credit to buy that 102 strike calls without any loss, and instead collecting a credit here. So we can put on many of these contracts. Keep in mind, it does take some buying power to sell these puts. It does, depending on the strike price width. This is 5, so it's 500 to put on a trade like this. So this is a no cost to us, except just taking up some buying power initially to see if this 102 strike calls plays out. And so we're really interested in these 102 strike calls to see if they can, if something happens in these 7 days by May 19, if these calls that are being bought here is anything unusual. Maybe it could be an insider that knows some kind of information that's going to be announced next week, and so we're gonna get in onto it, because this is public information, and if insiders are using this information, but we use public information to follow the insiders, then that's perfectly legal, because we're using public information. So that's what we're thinking here. All right. So keep in mind too that we will be at no cost. If it doesn't rally, we will still break even. So that's the thing. Okay. So take care and subscribe if you haven't. Smash that like button. Comment below on what you think can happen to Expedia. Do you think it's going to cross this? Start going up and rallying past its past resistance in the past few months? And are those 102 strike calls going to become profitable? That is the question, because there's other things that could be happening that we don't know about, and that's what these options are telling us. Okay, let us know in the comments below. Take care, everybody.